During the COVID, I think the use of technology and the use of the Prime Minister's Jan Dhan Yojana, which is a financial inclusion program, and technology, all three combined to help the government target really the most affected segments of the population by the pandemic. And that is why there was not any leakage of government stimulus. And therefore, the stimulus amount need not have to be so massive as it was the case in several other countries. So that is a very, very important reason. And secondly, the nationwide lockdown was never repeated after the first nationwide lockdown. So the economic activity was allowed to happen without necessarily putting the nation through a grueling lockdown for long periods of time. And the second thing I think that helped the government was also in the last 2 years, once the conflict broke out in Ukraine, its ability to manage and secure energy supply for India at affordable and reasonable prices. So that and the COVID management both set the foundation for the recovery to happen, which is naturally bringing in tax revenues, allowing the government to do both capital spending and also inclusive development spending as well.
Dr. Van, clearly India and the economy has momentum to it. Where then would you put nominal GDP targets for 24 and 25?
Well, we have, the budget has assumed 10.5% as the nominal GDP growth, which is, I think, a prudent one. You could slice it into 6.5 and 4, roughly speaking, or you could slice it into 7 and slightly lower deflator. But I think in general, where we anticipate the nominal GDP growth need not be the same number that the budget adopts. In fact, last 2 years, the budget has been adopting slightly more conservative numbers. I think the expectation is that a real GDP growth could be somewhere between 6.5 and 7% for FY25. And if you assume that the overall deflator will be about 4%, you are looking at something like 11.2% of nominal GDP growth.
Isn't there a risk, though, to those numbers, given the global economic uncertainty and given the headwinds potentially to external sources of revenue contribution to export growth?
No, that's absolutely right. But we did look at the numbers pre-pandemic. The global GDP growth and global trade volumes growth were absolutely as similar to what we are experiencing right now. So pre-pandemic, up to 2019, the Indian economy did manage to grow at 7.2% without global growth, without global trade volume growth. And at that time, mind you, the Indian banking system was going through its own consolidation. Now, if you assume that there are not going to be enough support coming from global external trade and external growth, but most important differentiator for India is that its financial system has been well repaired. The corporate sector has very strong balance sheets, and that should help us drive domestic investment-led growth.